This PowerPoint video presentation is meant to convey the Palace Way Mobile Home Park investment opportunity. It is a real estate equity investment and is intended for accredited investors. This is an investment in the equity portion of our new real estate development where we are building a new, what's called greenfield, from the greenfield up, mobile home park. It's going to be located in San Marcos, Texas, just south of Austin, Texas, along the very high growth IH-35 corridor. Earnings over the lifetime of the investment will vary, but they'll be from 14% plus. Now here's a disclosure the Securities and Exchange Commission wishes me to avail you of. This is not an offer to sell nor a solicitation of an offer to buy any securities. Offers are made only by prospectus or private placement memorandum or other offering materials. To obtain further information, you must complete our investor questionnaire and meet the suitability standards. You can obtain this by emailing me, phoning me, or you can go to palaceway.com and register there, and we'll get you access to these documents. Now, this is an approved project. The zoning is in place. It was approved first part of June. The utility right-of-ways have been completed. The city sewer is approved, the water is approved, and the electricity is approved. So we're doing the platting now, and the project is investor ready. It is an all-age manufactured home community, 250 spaces located on approximately 44 acres of ground. It's located in the fast-growing area, what Forbes called one of the fastest-growing areas of the United States, San Marcos, Texas. It's about just south of Austin, Texas. It's located along the South Texas's fast-growing IH-35 corridor. So we're 31 miles south of Austin, 49 miles north of San Antonio. And these are some of the other popular areas that people like to move to that we're close to. It's for accredited investors. So you can invest in a mobile home park development and get very good returns. Now we're unique in that we're one of the few development companies that allow investors to invest in our projects. And we're one of the few people that do mobile home parks. We also do light industrial warehouse parks. So it's ready for investment now. All the entitlements have been completed. It's well located. And the reason we do new development is that is where wealth is created, and you can participate in that wealth. Now, it says we have 2 ways to invest. We actually have 3. But you can invest directly with any of your retirement funds, self-directed IRAs, etc., into a specific project, this particular mobile home park. We do have a Opportunity Zone investment fund. This park is located in an Opportunity Zone. So you can invest capital gains through either your own Opportunity Zone fund that you've set up or through our managed Opportunity Zone, the Palace Way Opportunity Zone Fund. And then we have a third way. Because we also have a light industrial business park that we're building, you can loan money to build one of them buildings. Instead of us borrowing money from the bank, you can be the bank. So you can earn 14 to 22% returns. It's hard to say exactly what it was going to be, but our projections say up to 19 to 22%. So we like to be conservative. So over the life of the project, which will be 10 years, the average returns annual will come around somewhere between 14 and 22%. So it's a mobile home park that we actually allow people to invest in. I don't know of any others that are available in the United States at the moment. Now, mobile home parks or manufactured homes are affordable housing. It's a land lease community, and it is located in Opportunity. So this is an old investment. It's finally back. In the 1950s and 1960s, mobile home parks, you built one of those, the people will come, and it was like printing money. They were just cash cows. Well, that declined in the 1990s and early 2000s because of the way the government was financing homes. It was actually cheaper monthly payment-wise to buy a regular home than to buy a house and put it in a mobile home park or put it on land. Well, over the last 25 or 30 years, what's changed is that taxes and insurance and city fees and development costs have run the price up so that even when you buy a $200,000 house, you're apt to have a $1,700, $1,800, $1,900 payment. And that's just not affordable for everybody. So that means that mobile home parks then become an affordable alternative to standard housing. So today the numbers work. Every now and again, all the real estate forces converge to create a good investment. I remember in the 80s and 90s, that was mini storage, and they're still being built today. They're not as lucrative as they used to be because there's so many of them. Apartment complexes used to be very lucrative. They're not as lucrative as they used to be, but there's such a high demand, and there's lots of people in that business. We think that mobile home parks are a better investment. So get great returns. It's an all-age park, so we're letting all different ages in there as compared to the other type of park, which is a senior only. They provide the highest monthly lot rental rates, are the easiest to manage, and bring the highest price on resale value. 96% occupancy rates in the metro area. Now this is the San Marcos, Austin metro area, but it's true nationwide also, that the occupancy rate in mobile home parks where the people own their house but rent the land, the occupancy rates run at 96 to 100%. You say, well, why is it 96? Why isn't it 100? Because some of the owners of these parks don't really want to be at 100%. They want the ability to bring in a couple, 3 houses every year and sell those houses, but they can't do that if they're 100% full. So they have a reason for not trying to get to be 100%. So mobile homes are affordable housing. On average, if you buy a house in a park and then rent the land, of course it depends on where you live, but 20 to 30% less than it would cost you to rent a comparable size new apartment. So high demand from families looking for affordable housing cost per month, demand for alternative to renting apartments. Besides, you're going to own the house, you'll build up some equity, and you get a park in front of your house. You don't have to park in the parking lot and take the elevator or climb up 3 or 4 flights of stairs. Makes it much easier to take your groceries in the house. And because you own it, you can kind of do what you want with the house. So the 2 ways to invest: direct investment with your IRA, self-directed IRA, or any other retirement money that you might have or other savings, and through our Palace Way Opportunity Zone Fund if you want the tax advantages of investing through the tax advantage way. So that requires you to invest only capital gains money. A few of the questions we get is, what's the timeline for this? Well, now that we have the entitlements out of the way, we'll be starting construction within the next 6 months, hopefully. Some of it depends on how fast we can get the rest of the equity up and the bank loan secured, but that's pretty much close to it. It typically, from the time we find a piece of property and get the entitlements done, that can be 18 months to 2 years. In this case, it's been 18 months. So it's going to be a while before we make another mobile home park that you can invest in. So if you want to get in, now's the time to do that. We will have another offering, but it could be as much as 2 years away. It takes us from 30 to 40 months to fill the park up. In the meantime, the investors are getting accrued interest that accrues to their account to be paid out later. So the timeline for construction, because it's in 3 phases, varies from 5 to 10. So real estate is one of the safest investments that you can do. It doesn't have the volatility the stock market does or other types of investments. It is a little less liquid. You can't just take your money out, so you have to be willing to put it in for the long haul. That's probably the only downside. The nice thing is that manufactured housing, or mobile home parks, as they're commonly known for us old guys, is that they're affordable housing and they tend to do well in bad economies and good economies. And the reason is we're the alternative. We're the alternative if you don't want to make a $2,000 house payment. We're the alternative if you don't want to live in an apartment. We're the alternative if you live in a house and you're downsizing because you can't afford the payments anymore. We become the alternative. And so we tend to do well in both good and bad economies, which is why they've always been considered cash cows. I know it's not a pretty name, but in our investment world, we kind of like that term. So in our case, the lot rent for the lot will be $600 a month. The rent is for a home site with a storage shed because we don't allow outdoor storage. So the house comes with a storage shed, 2 parking spaces, and a well-maintained park with amenities. And the residents, of course, will own their own homes. The picture here is similar to what one of our houses will look like. This happens to have a parking space for, gosh, 3.5. The project rental income will be in the neighborhood of $2 million. Total part net will be around $4.4 million. So we'll have a free cash flow after payments to the bank of around $930. The project will cost around between 11.3 and 12.5. We're not for sure exactly what the cost will be. Costs change. Park revenue source, 80% will be from home site sale rentals. 10% of revenue will be from renting homes, and 10% will be from other sources, maybe sale of homes and other fees. The park value when completed will be between $22 and $25 million. And when we sell the park, everybody will have a nice big picture. So the exit strategy for us is we sell the park in 7 to 10 years. Because this is in an opportunity zone, we're probably going to go 10 years. If we go any less than that, then we'll be taking the people out that want to get out earlier through a loan rather than a sale, because of the opportunity zone investors are going to want to stay the full 10 years so that their profits are tax-free. So we can do some refinancing if needed. So a private equity LLC, the development of all age mobile home park is for accredited investors, 5 to 10 year investment, better count on 10. Minimum is $25,000. The average investor puts in around 200. We're raising $3.5 million, maybe $4 million, to develop a $11.3 to $12.5 million park with a projected profit of $1.4 million and a goal of 20% annual return on equity. That's a goal. Realistic goal is somewhere between 14 and 22% based on projection, but we're out 10 years on that projection. So you have a limited time to invest. We've already raised in excess of $1 million, so we're only doing, say, 3.5. So we got 2.5 to go. A couple of investors put in big chunks like $1 million each, and there's not going to be a lot of spaces left. So we'd love to have you as an investor. If you're interested in this project, you can give me a call, visit our websites, or send me an email, and we'll get the information to you. We'd be happy to answer your questions, meet with you, and see if this investment is right for you and your family. So take action. It's time to do it. We can't just think about it. If you want different results, you're going to have to do something different. This is what in the industry is called a alternative investment because it's non-standard. You would be a passive investor. It's a pass-through, so any tax advantages would pass through to you. But you're not an active investor because it's a managed project. So there's my phone number. Feel free, give me a call. Well, we come to the end of this video presentation about the Palace Way Mobile Home Park investment opportunity. A little bit about me. My name is Jim Glasgow, or James. 35 years as a real estate investor. I'm experienced with residential, commercial real estate, land, billboards, all kinds of things having to do with real estate, remodeling, construction, and development. And lots of training in business management. I'm the general partner of the Palace Way companies. I'm a real estate book author. My most popular book is How I Made Millions in Real Estate and How You Can Too. It's about becoming a landlord and getting wealthy, or letting tenants make you wealthy over a longer period of time. I do some instructing in real estate for various real estate investor associations around the country. And I've owned businesses or managed businesses for more than 40 years. The last business I had, I owned for 28 years. Horizon Building Systems Inc. We built buildings, and PatioStore.com were the two businesses, and I sold those after 28 years as a self-employed individual. We'd love to hear from you. Give me a call or visit our website. We would love to have you as an investor. Thank you.